Okay, let's unpack this. You probably saw the ticker, QUBT, that's Quantum Computing Inc. And then, wow, up 39% on May 16th, just after their Q1 earnings came out.
Huge jump. And if you're one of our Stock Analytics AI $4.99 a month members, this kind of thing, this rapid move linked to earnings, it's exactly what these deep dives are for.
Right. You give us a ticker, and we prioritize a deep dive like this one, digging into the analysis, the earnings, the whole picture.
And it's fascinating, isn't it? The buzz around QCI, that price jump.
Mm-hmm.
It really makes you ask, okay, what is actually going on here?
Exactly. So today we've got a brand new deep value analysis report dated May 17th, 2025, plus, a bunch of other sources. We're going deep on Quantum Computing Inc., or QCI.
Mm-hmm.
And our mission for you listening is to cut through all the quantum hype and the market noise. We want to figure out what this company really does,
Yeah, how's the management? What do the financials look like?
What are the real risks, the advantages? Especially in this quantum space that's just, exploding. Think of this as your fast track to getting properly informed.
Without needing that physics PhD, right?
Exactly. And stick with us, because at the end, we'll tell you again how Stock Analytics AI members get these deep dives prioritized.
And I think a key question right away is, can QCI actually deliver? They talk about accessible, affordable quantum now. Is that real, or is it just, talk?
That's the million-dollar or maybe billion-dollar question here. Okay, let's dive into Chapter 1, Understanding the Business. So, QCI, they call themselves an integrated photonics and quantum optics company.
Right.
Their big claim is delivering quantum machines that people can actually use affordably now, not in 10, 20 years, which sounds ambitious.
It really does. That emphasis on now is interesting. A lot of quantum companies are aiming for those huge universal machines way down the line.
Yeah.
QCI seems more focused on specific near-term problems.
But is now actually bringing in money? Or is it more of a marketing thing while they face the same long road as everyone else?
That's what we need to figure out.
Well, looking at the revenue, the report's pretty clear. They're very early stage, like Q1 2025, only about $39,000 in revenue.
Wow, $39,000.
Yeah. From some first product sales, a few foundry service orders. The real hope, it seems, is their new fab down in Tempe, Arizona, the TFLN fab.
Thin film lithium niobate.
Right. They're expecting that to really start kicking in revenue-wise in 2026.
Okay, so that $39,000, I mean, compared to their market cap, which we'll get to, it's basically nothing.
It's a rounding error.
It really highlights how much the market is banking on the future, specifically on that Tempe foundry starting to print money, essentially.
So what are they actually selling? Let's break it down. On the quantum machine side, they have the Dirac 3.
Okay.
It's their third-gen machine, uses QUBTs, not qubits, quantum digits.
Right, so not just 0 or 1, but potentially more states, like a dimmer switch instead of a simple on-off.
Exactly, more possibilities. They say it's good for complex optimization problems. Apparently Sanders TDI is using it for drug discovery stuff, and NASA for cleaning up LiDAR data.
Interesting. NASA's a good name to drop.
Definitely. And then there's the EMU core. That one's aimed at machine learning. They actually sold one to a big car maker for R&D.
Okay, so some actual sales, even if small. And that focus on QDITs is a differentiator if it works better for certain problems.
Could be an edge. Now, beyond the quantum machines, they're also making components. And the big story there is definitely that TFLN photonic chip foundry in Tempe.
Yeah, you mentioned that TSLN.
Yeah.
It's like a special material for light manipulation.
Exactly. Super important for their kind of quantum computers, but also for high-speed data communications, telecom, lots of applications. This foundry is a huge strategic piece for them.
Right, because TFLN chips are in demand.
Big time. And they're making other things too. Entanglement sources, frequency converters, a UQRNG.
A quantum random number generator. For security.
Yeah, secure communications, things like that. And even a quantum photonic vibrometer. Sold one to Delft University.
Okay, so it's not just the big quantum computers. That diversification into components, especially with the foundry, makes sense.
Yeah, the TFLN market might be a more immediate revenue source.
Definitely could be. So what makes them different? What's the secret sauce?
Their big pitch is the room temperature, low power operation. All thanks to that TFLN tech.
Which is a huge contrast to competitors using superconducting qubits, right? Those need intense, expensive cooling.
Exactly. Think colder than outer space, huge energy bills. QCI says their way could mean massive cost savings for users.
That's a potentially massive advantage if the performance holds up. Cooling is a major headache and cost center for quantum right now.
Absolutely. But let's talk size. QCI's market cap, mid-May 2025, was around $1.81 billion.
Okay, not tiny.
Not tiny, but compared to IBM, Google, or even other quantum players like IonQ at maybe $7.75 billion, D-Wave around $3.2 billion, it's much smaller.
Remember that $39,000 revenue?
Yeah, the gap is enormous.
Yeah.
At only 41 employees.
It just hammers home how much future growth is priced into that $1.8 billion valuation.
Yeah.
The market expects them to scale up massively.
So their value proposition, their main pitch, accessible, scalable, cost-effective quantum and photonic stuff running at room temperature.
And the U.S.-based foundry.
Big part of it. Most TFLN currently comes from China, so they're playing the secure U.S. supply chain card. Very timely.
Yeah, that's smart. Geopolitics makes that a potentially huge selling point, especially for government or defense work.
And they're focused on solving real problems soon, not just theoretical physics.
Okay, so let's zoom out. The whole quantum industry, it's booming.
Oh, yeah. Global market projected at $1.88 billion for 2025, growing fast, maybe near $5 billion by 2029.
Wow.
Lots of government money flowing in U.S., Europe, China. VC funding, too. And that specific market for TFLN modulators could hit $2 billion by 2029.
So the tide is definitely rising. QSI is trying to catch that wave with their foundry.
Exactly. But who else is surfing? The competition is fierce.
Yeah, you've got the giants, IBM, Google, Microsoft.
And then specialized players, Rigetti, D-Wave, IonQ, Quantinuum, Intel, Pascual, Amazon, loads of them, all trying different approaches, superconducting, trapped ions.
And QCI is betting on photonics, on light.
Right. Trying to carve out their niche with TFLN, room temperature. It's like a quantum space race, as the report calls it.
That feels about right. Lots of different rockets heading for the moon. Not clear which one gets there first or if multiple routes work.
And governments are watching closely. National security, economic edge. It means more rules.
Export controls, investment screening.
Yeah, and AI and quantum are starting to merge in security discussions, like CMMC for defense contractors, plus the worry about quantum breaking current encryption.
Which creates a market for quantum-resistant cybersecurity. QCI is looking into that, too.
They say they are. And again, that U.S. foundry could be a plus in this regulated environment.
Makes sense. But getting into this race isn't easy, right? The barriers.
Massive, huge R&D costs.
Oh, yeah.
QCI estimated maybe $350–500 million just for the initial setup.
Yeah.
The tech is incredibly complex, and finding people who actually understand it, there's a talent shortage.
Big time.
Plus the fundamental physics challenges, coherence, errors, scaling up, and the hardware is usually super expensive.
Though QCI hopes to tackle that cost part.
Right. And even getting the basic materials like those TFLN wafers can be tricky. The report does mention Dr. Huang, their interim CEO, has strong academic ties, which might help attract talent.
Still, it's a tough climb. High walls to scale for any new entrant, even with a differentiated approach like QCI's.
So do they have a moat? A real competitive advantage, their brand. Still building, maybe getting a boost from recent news.
Okay.
Cost advantage. That's the hope with room temp tech. And maybe economies of scale from the foundry eventually. They claim they're the only U.S. company processing these 150mm TFLN wafers, projecting like $180 in inventory value in the first year.
That's a bold claim.
Yeah.
If true, and they can execute, that's significant.
But right now, high expenses mean no scale benefits yet. Network effects, limited, switching costs, maybe later if customers get locked in.
So the moat really hinges on the tech and the foundry, doesn't it?
Pretty much. Their unique assets are that proprietary photonic tech, the entropy quantum computing running at room temp, the TFLN know-how and that U.S. foundry key differentiator, their patents, and this focus on QUBTs for solving integer problems natively. But yeah, that U.S. foundry in today's world, that feels like the most concrete edge right now.
The QUBT angle is technically interesting, but yeah, it needs validation.
Yeah.
The foundry is tangible, strategic, addresses supply chain fears.
Okay, let's shift gears. Chapter 2, Management. Who's running the show?
Right.
We have Dr. Yuping Huang. He's interim CEO and chairman. He founded QPhoton, the company QCI bought in 2022.
Okay, so he came in through acquisition.
Yeah. Got 20-plus years in quantum optics, brought in research funding before. And he owns a big chunk of QCI, like 17.5%.
Significant skin in the game.
He stepped in when the previous CEO, Dr. McGann, retired. They're still looking for a permanent CEO. Then there's Chris Bumler, the CFO, since last July, but he joined back in 22. Solid finance background.
And McGann, the former CEO.
He led the Dirac 3 launch, commercialization push, got the foundry started. But overall, management tenure is short because of the CEO change. Board's relatively new, too.
That CEO transition adds a layer of uncertainty, definitely. Finding the right permanent leader will be key. Juan's expertise is good, but is he the long-term business leader? We'll see.
Now, here's where things get complicated. Crisis response history.
Oh.
Yeah. QCA, some current and former execs, they're facing securities fraud class action lawsuits. Filed early 2025, covering 2020 to early 2025.
Oof. What are the allegations?
Pretty bad. Overstating their tech capabilities, misrepresenting the NASA relationship, being misleading about the foundry status.
Wow.
Even fabricating revenue through related party deals, putting out false press releases to boost the stock. These seem triggered by critical reports from short sellers like Iceberg Research, Capybara Research.
Which tanked the stock, I imagine.
Yeah, QCI's official response in their filings, allegations not without merit. They intend to defend vigorously, but not much detailed public pushback. These lawsuits are a massive cloud. And the timing. Dr. McGann retires right when this is brewing. Dr. Huang steps in. It raises questions.
That timing is definitely awkward. And these allegations strike right at the heart of management integrity and transparency. Short seller reports adding fuel. Yeah, that's serious.
Very serious. The outcome of these lawsuits is critical. It overshadows everything else, really.
Absolutely. It casts doubt on past communications, future guidance, everything.
So communication transparency. They do earnings calls, press releases, but these lawsuits directly challenge the accuracy of what they've said before about the tech, partners, the foundry.
And while they deny it formally in SEC filings, the lack of detailed public refutation leaves a void. Might be legal strategy, but it doesn't help investor confidence.
Not at all. Which brings us to ethical reputation. It's taken a huge hit from these allegations. If even some are true faking revenue, hidden deals, that's a major breach.
Especially the undisclosed related party transactions. That's always a massive red flag.
Right. Their Q1 filing says no new related party deals, but that doesn't cover the period the lawsuits are about. The proxy mentions some past stuff, but the suits allege undisclosed issues.
Yeah, that distinction is important. Transparency is crucial, especially with related parties. Any whiff of hidden dealings is deeply concerning for investors.
So are they honest, capable, shareholder-oriented? Honesty, big question mark right now because of the lawsuits. Capable. Dr. Huang seems technically brilliant. They built the foundry, but turning tech into profit. Still unproven.
And shareholder-oriented. Huang's big stake should align him, but the stock-pumping allegations, if true, contradict that. Plus the dilution from stock offerings, his recent selling, it's a mixed picture at best.
Okay, let's talk capital allocations, still in Chapter 2. They are investing in the core business. That Tempe foundry is exhibit A, huge investment, just finished.
Right.
R&D spending is up significantly, 34% year over year in Q1. Trying to boost sales and marketing, too. It's typical growth company spending, but needs constant fuel.
That foundry is the big strategic bet. R&D is essential in quantum. But yeah, these investments need to pay off eventually.
M&A. The big one was buying QPhoton in 2022, bringing in Huang and integrating hardware software. They added someone with M&A experience to the board recently.
Suggests they might look at deals later.
Maybe, but near term seems focused on organic growth, getting that foundry running. No share buybacks, no dividends expected for this stage.
Makes sense. What about return on invested capital? How well are they using the money?
Not well historically, consistently negative, like 90 to 77% end of 2024. More recently, maybe negative 25% normalized. Typical for early stage, but needs to improve.
Yeah, that's a key metric to watch going forward.
But here's a twist. They raised a lot of cash, like $93.6 million in Q1 2025 through a private placement, after the negative reports and lawsuits hit.
Really? That suggests some investors still believe strongly in the TFLN story, despite the cloud.
It seems like it. But it underscores their reliance on outside funding. So are they using capital effectively? It's tough to say.
All right. They built the foundry potentially huge value, investing in R&D, have cash.
But burning cash, diluting shareholders, bets are unproven, and the lawsuits question past decisions transparency. Feels like a high-stakes gamble on TFLN.
Definitely speculative. The foundry is the key asset, but its success isn't guaranteed, and future M&A adds another layer of uncertainty.
All right. Chapter 3, Financial Health. Let's hit the key numbers. Mid-May 2025 Q1 results. Market cap, $1.81 billion. PE, negative, no earnings.
Okay.
Revenue growth. Looked good, 44% YoY in Q1, but off a tiny base, hitting just $39,000, trailing 12 months revenue. only $385,000.
So still incredibly small revenue for that market cap.
Gross margin actually fell to 33%. Operating loss in Q1 was $8.3 million. Now they reported $17 million net income.
But wait, wasn't that mostly non-cash?
Exactly. A $23.6 million non-cash gain skewed it. Adjusted net loss was around $6.6 million.
Right, gotta look past the headline number there.
Debt is super low, but only because they keep selling stock, diluting existing holders. And the price to sales, it's astronomical, around 4690x.
4,690 times sales. That just screams massive, massive future expectations priced in.
Totally. The low debt and cash are nice, but fueled by dilution, and that Q1 profit is just accounting noise.
So financially, very early stage, valuation based entirely on hope and future potential, reliant on equity financing.
Pretty much. Financial stability. Earnings consistency is a definite no. Consistent losses, Q1 profit was an anomaly. No dividends. Debt is managed well because it's low, but the risk is cash burn.
Right. Working capital looks strong due to the cash balance, but stability really depends on controlling that burn rate and getting more cash, or ideally, real revenue.
Looking back historically, same story. Tiny revenue, big losses in 22, 23, 24.
Yeah.
They did restate 22 and 23 financials.
Oh.
Yeah, ended up showing smaller net losses, mostly due to accounting changes for financing, warrants, stock comp. But even with all that, they did finish the foundry, so they can get big projects done.
That operational execution is a positive sign amidst the financial struggles. But the history confirms the pattern. Losses, minimal revenue, complex accounting.
Okay, that wraps up the first half. We've looked at the business, management woes, the financials still to come, market sentiment, ownership, risks, and the final verdict.
Stay with us. We'll be right back after a short break to dive into how the market sees QCI and what the future might hold. Don't forget to subscribe to the Stock Analytics AI YouTube channel.
Welcome back to the deep dive. We're digging into Quantum Computing Inc., QUBT. Let's get straight into Chapter 4, Market Sentiment. How does the market feel about this stock?
Well, volatile is probably an understatement. Highly speculative, reacts instantly to news.
Like that 39% jump after Q1 and the Foundry news. Huge reaction. It's labeled very high risk. Big daily swings are normal.
And don't forget those short seller reports that hit it hard earlier. So you've got this real split, huge excitement versus deep skepticism.
Yeah, and the market grabbing onto that headline profit in Q1, even though it wasn't really operational profit, suggests maybe a lot of momentum chasing, perhaps retail driven.
It certainly seems like it. Is the surge based on fundamentals or just hype, especially with the lawsuits still hanging out there? That's the question.
What are the analysts saying? Not much coverage, actually.
Typical for these speculative names.
Right. We saw one strong buy with a $14 target, which wasn't much higher than the price after the surge. StockInvest.us downgraded it to hold accumulate, seeing resistance around $13.86.
So limited coverage, and maybe a feeling the recent run-up captured a lot of the near-term upside already.
Could be. News definitely drives it. Q1 earnings, Foundry opening stock soared, NASA subcontract, initial sales positive bumps, lawsuit filings negative, though it recovered.
And the CEO transition?
Seemed more neutral, less impact. Interestingly, it also seems to trade in sync with other quantum stocks sometimes. Like news about D-Wave or comments from NVIDIA's CEO can move QUBT, part of a quantum basket.
That basket effect highlights the sector-level sentiment driving things, not just company specifics. High sensitivity to any news confirms the speculative nature.
Okay, short interest. This is interesting. It's high. Around 19% of the float.
That's significant, way above peers.
Yeah.
Shows real skepticism out there.
Yeah, but the days to cover is low, like 1 to 2 days, meaning shorts could get squeezed quickly if the price runs.
A classic short squeeze setup potential.
And short interest actually dropped a bit before the big price surge, plus lots of off-exchange shorting reported.
Shorts covering ahead of expected good news. That could definitely help fuel a rally.
Now the options market on May 16th. Absolutely wild.
How so?
Implied volatility super high, though maybe lower end of its recent range, but volume through the roof, like 10 times the average.
Wow. Bullish or bearish?
Seemed bullish. The put-call volume ratio was low, 0.32, meaning way more call buying. That's on price going up. Overall open interest also leaned bullish. Lots of unusual activity in near-term options.
Okay, so you have high short interest signaling pessimism, but the options market screaming short-term bullishness.
Exactly. It feels like a classic battleground stock. Shorts versus bulls. That recent short covering might have kicked things off, and the options frenzy suggests heavy speculation, maybe retail and algorithms jumping in.
Which means Potential for really sharp moves,
Right.
possibly reversals, right? This isn't stable price action.
Not at all. Okay, Chapter 5. Ownership structure. Who owns this company? Institutions. Not a huge amount, maybe 15–19%.
Relatively modest. Who are the big ones?
Vanguard, Aliska, BlackRock. But their stakes are pretty small, like 1–4%. And institutions seem divided, some buying recently, others selling out completely.
So no strong consensus among the big money players, typical for smaller, riskier companies.
Insiders. It's really dominated by Dr. Yuping Huang. He owns somewhere between 15.6% and 17.5%.
That's a big slice. Aligns his interests, you'd think.
Generally, yeah. Though he did sell about $1.7 million worth recently and transferred another 2 million shares non-market. Still holds a lot, though. Other insiders hold much less. Net insider selling overall recently.
That recent selling, even if he still holds a lot, might raise an eyebrow for some, especially given everything else going on. But yeah, high insider ownership is usually seen as a positive alignment. Also concentrates power.
Definitely concentrated with Huang. Retail investors hold about 23%, insiders overall maybe 19–20%. So Huang's vision is really driving the bus here.
Makes sense.
Yeah.
What about corporate governance? How's the board structured?
Majority independent directors. Huang is chairman and interim CEO, but there's an independent vice chair lead director. Standard committees audit, compensation, nominating all independent.
Okay. Seems reasonable on paper. Board oversees risk.
Yes. Proxy details executive comp for 2024 salaries, stock awards from McGann, Huang, Baumler. Philosophy's typical: attract, retain, reward performance. Also lists related party deals, mostly around the QUBT merger.
Any anti-takeover stuff?
Standard things are possible: classified board potential, limits on calling special meetings, blank check, preferred stock. Nothing too unusual, but worth noting.
So governance looks fairly standard, but Huang's dual role means that independent oversight is extra important.
Agreed. Okay, Chapter 6. Risk assessment. Let's do a quick SWOT. Strengths.
We covered some proprietary photonics tech, that key U.S. foundry IP portfolio, Huang's expertise, strong cash position now, some early customer traction.
Right. Weaknesses.
Negligible revenue, history of losses, still very early stage commercially, dependent on raising more capital. Those big management credibility concerns from the lawsuits, small size, variable margins.
Opportunity.
Massive growing quantum market, big demand for TFLN chips, finding niche applications, potential government contracts, quantum cybersecurity angle, partnerships.
And threats.
Intense competition. Tech could become obsolete fast, long road to profitability. Market adoption might be slow. The litigation reputation damage, economic downturn hitting capital access, supply chain risks, regulatory changes, geopolitical issues, and those U.S. tariffs from 2025.
Yeah, let's touch on that. These could increase costs for QCI if they import TFLN wafers or components. Could disrupt supply chains for them and the industry.
But could it also make their U.S. foundry more valuable?
Exactly. Could be a strategic advantage. Might push them to source more materials domestically. Adds another layer of uncertainty, though. Market volatility.
It's a double-edged sword. Higher potential costs, but also potentially strengthens the strategic case for their domestic production.
Okay, let's try to pull this all together. Chapter 7. Conclusion. What have we learned?
QCI is definitely an early-stage company, high potential tech in a hot sector. The room temperature angle and the U.S. foundry are smart, strategic plays.
But a very long way from proving commercial success. Financials show lots of cash, but minimal revenue, ongoing losses. And those lawsuits are a huge shadow. Competitive market.
It's a mix of promising technology and significant red flags. The potential is there, but the risks are immense.
If we think like Warren Buffett for a moment, does QUBT shit?
Probably not. Circle of competence is tough for most with quantum tech. No predictable earning power. Moat is still theoretical. Big questions about management integrity due to the lawsuits. And the valuation is certainly not cheap based on current performance.
Yeah, fails most of those classic value tests right now.
Definitely.
So the bottom line, QCI is a speculative bet. Very high risk, potentially high reward, but really only for long-term investors who understand the deep tech and have a high tolerance for risk.
That strong cash position gives them runway, but they absolutely need to show real commercial progress and resolve those legal issues. Without that, it's just potential.
For traditional value investors, probably steer it clear for now. It just doesn't meet the criteria.
Agreed. It's a story stock right now, heavily reliant on future execution and market adoption.
And that brings us right back to that ticker, QUBT, and its big jump. Hopefully this dive gave you, the listener, a much clearer view of the company behind the ticker symbol.
Understanding the why behind the price move is key.
Absolutely. And remember, if you want us to prioritize a deep dive on a ticker you're watching, become a Stock Analytics AI $4.99 a month member. You submit the ticker, you get the analysis, including earnings breakdowns like this one.
It's a great way to get tailored insights.
Definitely. Now, before we sign off, please hit that subscribe button for the Stock Analytics AI YouTube channel, and let us know in the comments what companies should we tackle next.
We rely on your suggestions. All the sources we use today are linked in the description if you want to explore further.
Okay, and the important disclaimers. Please remember, this is not financial advice.
This content is AI generated, based on the research provided in the sources. Always do your own thorough research before making any investment decisions.
Investing involves risk. You could lose money. We are not responsible for your investment choices.
This report might contain forward-looking statements. These aren't guarantees of future performance.
And all information is current as of May 17th, 2025, and could change.
Definitely consult with a qualified financial advisor before making investment decisions. Thanks for tuning in to The Deep Dive.